China is the world's largest crude oil consumer, and its eyes are now on the rival United States' currency, the dollar. The Chinese have effectively challenged the dollar's dominance by launching the Petro Yuan, leading some to believe the US dollar's collapse is all but imminent. According to the South China Morning Post, China's state-run media outlet trading on the new oil futures contracts for September settlement started on the Shanghai International Energy Exchange at 440.20 yuan, $69.70 per barrel. Some 18,540 lots have reportedly been sold and purchased so far. Concerns that the dollar's glory days are over began last year. Petro Yuan futures open over 10 billion notional trades in the first hour. After all the preparation, all the expectation, cheerleading and doomsaying, China's yuan-denominated crude oil futures contract began trading tonight and appears to be off to a good start, with over 10 billion yuan notional traded within the first hour. So far, it has tracked WTI futures well, trading at around $2 premium to WTI when translated from yuan to US dollars. Additionally, well over 23,000 contracts have traded within the first hour for a notional trading volume of over 10 billion yuan, more than 1.5 billion notional, signaling significant demand. Offshore yuan is moving in sync with Petro Yuan futures, as WTI tends to track the US dollar. As we most recently noted, after numerous false starts over the last decade, the Petro Yuan is now real, and China will set out to challenge the petrodollar for dominance. Adam Levinson, Managing Partner and Chief Investment Officer at hedge fund manager Graticule Asset Management Asia, GAMA, already warned last year that China launching a yuan-denominated oil futures contract will shock those investors who have not been paying attention. This could be a death blow for an already weakening US dollar and the rise of the yuan as the dominant world currency. But this isn't just some slow newsday fad that will fizzle out in a few days. A warning for investors since 2015. Back in 2015, the first of a number of strikes against the petrodollar was dealt by China. Gazprom Neft, the third largest oil producer in Russia, decided to move away from the dollar and towards the yuan and other Asian currencies. Iran soon followed suit the same year, using the yuan with a host of other foreign currencies in trade, including Iranian oil. During the same year, China also developed its Silk Road, while the yuan was beginning to establish more dominance in the European markets. But the US petrodollar still had a fighting chance in 2015 because China's oil imports were all over the place. Back then, Nick Cunningham of oilprice.com wrote, "Despite accounting for much of the world's growth in demand in the 21st century, China's oil imports have been all over the map in recent months. In April, China imported 7.4 million barrels per day, a record high and enough to make it the world's largest oil importer. But a month later, imports plummeted to just 5.5 million barrels per day. That problem has since gone away, signaling China's rise to oil dominance." The slippery slope to the Petro Yuan begins here. The petrodollar is backed by treasuries, so it can help fuel US deficit spending. Take that away, and the US is in trouble. It looks like that time has come. A death blow that began in 2015 hit again in 2017, when China became the world's largest consumer of imported crude. Now that China is the world's leading consumer of oil, Beijing can exert some real leverage over Saudi Arabia to pay for crude in yuan. It's suspected that this is what's motivating Chinese officials to make a full-fledged effort to renegotiate their trade deal. So fast forward to now, and the final blow to the petrodollar could happen starting today, We hinted at this possibility back in 2017. With major oil exporters finally having a viable way to circumvent the petrodollar system, the US economy could soon encounter severely troubled waters. First of all, the dollar's value depends massively on its use as an oil trade vehicle. When that goes away, we will likely see a strong and steady decline in the dollar's value. Once the oil markets are upended, the yuan has an opportunity to become the dominant world currency overall. This will further weaken the dollar.
After a 25-year delay, the world's top oil buyer is launching its own crude futures contract. March 26 will see local currency oil futures in Shanghai in a challenge to the traditional dollar-denominated benchmarks. Here's our oil editor, Sung Woo. Sung Woo, what does China aim to achieve by introducing this contract?
What China is hoping for is eventually challenge the dollar-based main crude oil benchmarks, namely Brent crude and West Texas Intermediate. And then it's also part of ongoing efforts for the Chinese government to internationalize its own currency in global trade.
Sung Woo, so that's the big dream. The big dream is to challenge dollar dominance. I'm sure there are hurdles before that can happen. Talk to us about the key challenges before China can realize that big dream.
Okay, that's a very good question. The main challenge or hurdle at the moment is the apparent control that the Chinese government has over the yuan. So unless foreign investors and overseas participants have, as long as they have those kind of doubts or questions about Chinese government's control over the currency, its own currency, it will be very difficult for us to see anyone actually jumping in and just adopting that yuan-based contracts anytime soon, and simply because the dollar is the go-to currency for many years, and it's been there for decades now. So it's very hard for us to imagine the dollar to loosen its grip anytime soon. But still, it remains to be seen.
Now, if I look at previous examples of this, and we do have a lot right now, of course, trading on various commodities exchanges in China. So they've had those futures contracts for a while now. How have they been doing? And, are they now established as benchmarks?
Okay, that's also a very good question too. China has many commodity contracts trading already on its main big three exchanges, as you know, Shanghai, Zhengzhou, and also in oh, I forgot. Dalian, sorry. There are three main exchanges. And the trading there, sorry, I'm Chinese, I have to brush up on my Chinese. Anyway, the trading there has been exploded and mainly driven by speculators and speculation. So that is one concern that the foreign investors actually have at the moment, because those kind of excessive speculation or volatilities, any sort of uncertainties have kind of raised concern about yuan-based or the local currency-based contracts' reliability as benchmarks. So I can say that they are not yet benchmarks.
The petrodollar's downfall could be a lift for gold. Amongst all the trouble ahead for the dollar, there are some good news too. The US might have ditched the gold standard in the 1970s, but with gold making a return to the world headlines, we could see a resurgence. For the first time since our nation abandoned the gold standard decades ago, physical gold is being reintroduced to the global monetary system in a major way. That alone is incredibly good news for gold owners. A reintroduction of gold to the global economy could result in a notable rise in gold prices. It's safe to assume exporters are more likely to choose a gold-backed financial instrument over one created and out of thin air any day of the week. Soon after, we could see more and more nations jump on the bandwagon, resulting in a substantial rise in gold prices. Peter Schiff, a financial guru who predicted the 2008 recession, also said the dollar would collapse, and when it does, things won't look optimistic for those who use dollars. Although Schiff holds firm that the consequence of the Federal Reserve manipulating the economy will be the crash of the dollar, the Chinese Petro Yuan could also play a role. They, the Fed, actually made the bubbles bigger than the ones that popped. So now the dollar's collapse is going to be that much bigger, because it's now a bigger bubble with more air to come out of it. And I think that they have no more tricks up their sleeves. When this happens, it's over.